In recent years, China and Russia have been accumulating large quantities of gold, a move that has garnered significant attention from economists, investors, and policymakers worldwide. This trend raises important questions about the motivations behind these purchases and the potential implications for the global economy. In this article, we will explore the reasons behind China and Russia's gold buying spree, the strategic importance of gold in their economic policies, and the broader impact on the global financial system. The strategic importance of gold. Gold has always held a unique position in global finance, prized not only for its intrinsic value but also for its role as a safe haven asset. Unlike paper currencies, which can be devalued by inflation or economic instability, gold has historically maintained its value over time. This makes it an attractive asset for countries looking to protect their wealth and hedge against economic uncertainty. For China and Russia, gold serves several strategic purposes. Diversification of reserves. Both countries have been seeking to reduce their reliance on the US dollar, which dominates global trade and finance. By increasing their gold reserves, China and Russia are diversifying their holdings and reducing their exposure to the risks associated with the dollar. This strategy is particularly important given the geopolitical tensions and economic sanctions that both nations face from the West. Hedging against currency risk. The value of national currencies can be highly volatile, particularly in times of economic or political instability. By holding gold, China and Russia can hedge against the potential depreciation of their currencies, ensuring that they have a stable store of value in times of crisis. Strengthening sovereignty. Gold is a tangible asset that can be stored domestically, unlike foreign currency reserves, which are often held in overseas accounts. By increasing their gold reserves, China and Russia are strengthening their economic sovereignty, reducing their dependence on foreign financial institutions, and enhancing their ability to conduct independent monetary policies. China's gold strategy, the world's second-largest economy, has been steadily increasing its gold reserves for over a decade. The People's Bank of China (PBOC) has been a key player in this strategy, quietly purchasing gold and adding it to the country's official reserves. Several factors drive China's gold buying spree. Currency internationalization. One of China's long-term goals is to establish the yuan, also known as the renminbi, as a global reserve currency. To achieve this, China needs to build confidence in the stability and value of the yuan. Increasing its gold reserves is a way to back the yuan with a stable and widely recognized asset, enhancing its appeal to international investors and central banks. Trade and geopolitical tensions. As trade tensions with the United States have escalated in recent years, China has sought to reduce its reliance on the US dollar. Accumulating gold is part of a broader strategy to protect the Chinese economy from potential sanctions or trade disruptions. By holding more gold, China can mitigate the impact of any actions taken by the US to limit China's access to the global financial system. Economic stability. China faces several economic challenges, including high levels of debt and slowing growth. In this context, gold serves as a stabilizing force, providing a buffer against potential financial crises. By holding more gold, China can protect its economy from shocks and maintain investor confidence in times of uncertainty. Russia's gold strategy. Russia has also been aggressively accumulating gold in recent years, with the Central Bank of Russia (CBR) playing a central role in this effort. The motivations behind Russia's gold purchases are closely tied to its geopolitical strategy and economic policies, sanctions and economic isolation. Since the annexation of Crimea in 2014, Russia has faced a series of economic sanctions from the United States and European Union. These sanctions have restricted Russia's access to international financial markets and limited its ability to trade in dollars. In response, Russia has turned to gold as a means of insulating its economy from the effects of these sanctions. By increasing its gold reserves, Russia is reducing its reliance on the US dollar and building a financial safety net that is less vulnerable to external pressures. De-dollarization efforts. Russia has been actively pursuing a policy of de-dollarization, aiming to reduce its dependence on the US dollar in international trade and finance. Accumulating gold is a key component of this strategy, allowing Russia to diversify its reserves and reduce its exposure to currency risk. By holding more gold, Russia can conduct trade with other